Hello, guys. Here with you, Anna Tutova, co-founder of Coinstelegram, and our guest, who is with us already for the second time, Haseeb Qureshi, who is managing partner of Dragonfly Capital, one of the leading blockchain VC funds in the industry. They have been active from 2018, and last time we talked with Haseeb more than 2 years ago. And it was just before FTX crash, Three Arrows Capital and Luna crash, and so much more happens. So great to have you here now, Haseeb, and great to see that you are still with us.
Thanks, sir. Thanks for having me. I'm just barely holding on, but yes, thank you.
Yeah, so can you tell how your views changed on the industry within these years? The industry are basically much more matured, and how did you overcome all these crashes? And what do you see the next for it?
It's a good question. I mean, we've been relatively fortunate in that we managed to avoid most of the potholes in the industry. So, we never invested in FTX, no Luna, no BlockFi, no Celsius, no Genesis. So I think we've been fairly prudent in picking the right spots and making sure that we're partnering with folks who we think are building things that are kind of long-term, stable and resilient. Same time, I mean, what did we learn? I mean, we all learned as an industry kind of how naive we were. I think everybody was, oh, the metaverse is going to come and everyone's going to use tokens to do, to buy everything in their daily life. And, DAOs are going to replace companies. And there's just a lot of very kind of naive and idealistic thinking in the space. And I think what we've learned over time as the market has rationalized and kind of forced everybody to grow up is that, hey, okay, world doesn't change overnight. And a lot of these ideas may have been directionally correct or directionally interesting, but it takes a lot of work to get from here to there. And the other thing that I think it shows is at the end of the day, the predominant use case for crypto is also the first use case that was ever invented, which is money, finance, right? Capital. That's what Bitcoin was created for. And that is overwhelmingly what we're seeing the product market fit for crypto. There's stuff happening in gaming, there's stuff happening in DePIN, there's stuff happening at the outer edges of the story, but the main kind of heartbeat, the sort of the center of what's happening in crypto is always and has been from the beginning about money. And so that I think was one of the big reminders that was sketched into our minds from the last cycle, is that that's what you want to be focused on, and that's where I think most of the value ends up getting created.
And you told that you passed on all those deals, on all those companies which become bankrupt. So what's your due diligence and why did you pass on those deals then?
Bad deals, it's a little bit like Tolstoy says in Anna Karenina, where, good deals are all alike, but bad deals are all bad in their own way. And if you look at FTX or BlockFi or Luna, like the reason why they were bad deals was all very specific to each of those deals, right? So if you take, for example, Luna, I saw the Luna seed round back in 2017, and we passed, they did a bunch of strategic rounds over time, and we passed on every single one of them. And my view always has been, I've been writing about stablecoins for many years. And if you look at stablecoins, it's actually fairly straightforward to understand how they work if you actually look through to the underlying mechanics. Every stablecoin can be modeled as a bank. And a bank has assets, they have liabilities, and they have equity. And equity is kind of the delta between the assets and the liabilities. And if you see what happens over time as demand goes up, as demand goes down, you can model what happens to the assets, what happens to the liabilities, what happens to the equity. And if you understand stablecoins this way, you can model almost every stablecoin using this mental model of stablecoins. And Terra is basically a stablecoin, or sorry, it's a bank that gets more leverage the bigger it gets, which is fucking crazy, right? That's not the way you'd want to build a bank. You would not want a bank to get more and more leverage as it gets larger. If anything, you want the leverage to be stable or shrink the bigger that it gets. And so if you understand this, then what it implies is that as the coin grows and grows and grows, it's almost guaranteed that it will eventually explode. And of course, that's what happened, is that it grew and grew and grew and grew until it got so leveraged that it exploded. And so, there were a lot of people in the industry at that time who were talking about, oh, maybe Terra has achieved escape velocity. Yeah, maybe it's like kind of intrinsically unstable. You remember there were all these tweet threads of people who were trying to argue, yeah, you could make the argument that as it gets bigger, it gets less stable, but there's an economy, there's this thing, there's all these buyers, there's LFG, there's et cetera, et cetera. And I'm just like, look, these things work until they don't work. And when it doesn't work, it's going to explode, and it's going to explode in the most catastrophic way. And that is, in fact, what happened. And so, in our history as a firm at Dragonfly, we've only ever made 4 stablecoin investments. One of them is a company called Agora, which is like a centralized stablecoin. But if you look at the decentralized stablecoins, the only stablecoins we invested into are MakerDAO, Frax, and Ethena, which are basically the 3 stablecoins that have actually been stable and have been successful and have gotten to scale.
And now actually
So
there
that's
is a
why.
lot of speculation around Ethena that their model is quite similar to Terra. And so can you explain why it is not?
Yeah, that is absolutely not true. That is absolutely not true. So the thing about Terra is that Terra got more leverage the bigger it got, right? That's the reason why Terra was guaranteed as it got bigger to eventually explode. Ethena does not have that property. Ethena does not get more leverage the bigger it gets. Okay. So Ethena, most people don't know what Ethena is. All they know is that it's big. So Ethena is a tokenized cash and carry trade, right? Now, what does that mean? Cash and carry trade is one of the oldest trades in any financial market. In a cash and carry trade, you hold a spot and you go short the futures. If you hold a spot and you go short the futures, that's hedging, right? You're hedging your position. And so if you're hedging, that means you're delta neutral, meaning that your P&L will not go up or down based on the price of this asset. It should be neutral at $1. But of course, in crypto, when you're shorting an asset, if you're shorting the perps, usually the perps have a positive funding rate, meaning that people who are going long are paying people who are going short because there's too many people who want to go long. Because in crypto's markets are usually biased to go long. So if you look historically, roughly 90% of the time, funding rates in crypto have been positive, meaning that people are getting paid to short. So think about it is that people who are going short are basically providing capital to the crypto markets, right? The crypto markets want to gamble. They want to go long. But in order for them to go long, they need money. And there's an undersupply of money in the whole system. And the people who are going short are basically supplying that capital to the overall crypto market to help make the market more efficient, right? And in exchange for that, they get paid a yield. And that yield is what the people who are going long are paying for the right to go long. So because crypto is positive, the funding rate is positive, you can get paid to hedge. And so this is called the cash and carry trade. What Ethena does is it does this cash and carry trade initially with Ether. They hold the Ether spot, they short the Ether perps, and as a result, they collect the yield, and that becomes EUSD, is this delta neutral asset, the synthetic dollar, that also pays out a yield because of the funding rate. So the yield in Ethena, unlike in Terra, is not guaranteed. Terra guarantee you 20%, which is bullshit, right? There's no way you can guarantee 20%. Ethena doesn't guarantee anything. If the funding rate goes down, you get paid less interest. If it goes up, you get paid more interest. If it goes negative, you get paid 0 interest, right? The interest rate becomes negative. So right now, Ethena is paying out like 10% because crypto markets aren't as bullish. And when it's not as bullish, the funding rate goes down. Earlier, it was paying 60% because the crypto markets were crazy and everyone was super long. So because it pays a floating rate, it's not going to go bankrupt because it's paying too much interest, right? The thing that could possibly cause Ethena to go down is that the funding rates turn negative. If the funding rates turn negative, they turn negative because everyone's rushing to the exits. If everyone's rushing to the exits, then okay, everyone wants to go short instead of going to go long. That means that Ethena will start drawing down. That's why Ethena has an insurance fund. If Ethena has an insurance fund, then if it goes negative, it first starts drawing into the insurance fund before it starts breaking the dollar, right? But the idea is that you build up the insurance fund in the good times, and you draw it down in the bad times. And that's why you can have Ethena more or less staying at $1. The other wrinkle that it adds to it is that for Ethena, when it comes to Ether, instead of holding Ether spot, it holds staked Ether. So you're holding staked Ether to go long, you're shorting the futures, but because that staked Ether is also paying you like 4% on just the staked ETH yield, it basically means even if the funding rate goes negative, as long as it's less than negative 4%, you're actually okay because the stake ETH is making up for it. So that's how Ethena works. What I just described to you is a financial product, right? It's actually a very well understood financial product. It's one of the oldest financial products in history. It's nothing like Terra. Is it risk-free? No, of course not. It's not risk-free. Nothing is risk-free if it's paying you a yield, right? Unless you're getting treasuries, you have some risk. So the question is not, does Ethena have no risk? Of course it does. The question is Ethena as risky as Terra? The answer is obviously not.
Yeah, but seems that it's the play out mostly for the bull market, and will it be still sustainable during the bear market?
So, when I said that the funding rates in crypto are 90% of the time positive, that is inclusive of bull markets and bear markets. Now, you're right that in a bear market, the funding rates tend to be more neutral, closer to zero, or they turn negative. And so, one big question that Ethena has to answer is, what are we going to do in a bear market? The answer, of course, is primarily deleverage, in the sense that if there's a lot of assets in Ethena and it goes into a bear market, people will want to withdraw from Ethena. Hey, I'm not getting any yield, and I'm in Ethena to get yield. So they'll start withdrawing. And as they start withdrawing, that lessens the pressure on the downside of the market to basically make it so that Ethena is drawing down less, and also it is putting less downward pressure on the funding rate itself. So it is absolutely true that in a bear market, like a sustained bear market, Ethena is not going to be an attractive financial product. Like you're not going to want to go in that kind of environment. But then it's a very simple solution, which is that Ethena draws down and you withdraw your money from Ethena, the end, right? If you sort of think about Ethena more like a financial product, then I think it's more clear why it's not the end of the world if we go into a bear market and Ethena gets smaller. Ethena is not like Terra. Terra had to keep getting bigger. It could only go one way. Ethena is not like that. If you redeem from Ethena and you basically draw your money out, that is totally fine. Nothing breaks.
And what are your expectations for this bull market? How long will it last, in your opinion?
It's hard to say. I mean, I think a lot probably hinges on the election. I think if you see Biden win this election, I think that's going to be very bad for crypto, just because Biden has been so aggressive against crypto with the SEC and the CFTC and Treasury. I think if you see Trump winning, very likely the bull market will extend much longer. So in terms of total length, I don't know. Let's say Trump does win. I would guess that, it's at least another year in the tank, probably, or maybe something on the order of about a year.
After
the bull
the
market
election,
continues.
so since now, another year.
Yeah. That would be my base case guess, but it's almost impossible to time these things. No one really knows.
So do you have any specific investment strategy for fixing your profits during this cycle?
I do think that when the market really gets greedy is when you want to be fearful and when you want to be monetizing your investments. I think the market is strong. It's not yet frothy. I think you're going to see a lot more craziness from here if people really start to get retail activated. The reality is that retail is not really here yet. People talk about, the retail are buying here, they're buying there. But like if you look at compared to 2021, it was like Coinbase was the #1 finance app on the App Store almost every single day for all of 2021. Today, Coinbase is like number 30th to 40th on the App Store for finance, not even globally, just for finance. If you look in the app in 2021, Coinbase was #1 on the entire App Store for multiple days. Right now, Coinbase is nowhere near any of that. So I think if you just look at how much is retail engaged, the answer is not very much, right? If you go take an Uber ride, how often are they telling you about like, hey, you should buy this token? In 2021, people were getting that all the time, right? So that
but
just
it
shows you
gets
how
already.
far there is to go. I think we're still a ways away from that, right? Like people getting tips from their barbers and their Uber drivers. I haven't gotten any of that in the last year.
I see now random people starting messaging me now who have never been in crypto and asking whether they should invest or something. Or I see lot of
Dubai might be a
newcomers.
little different. Yeah, Dubai might be a little different. Dubai, I think, attracts a lot of the crypto types these days.
I would say it's not only Dubai, it's as well people in Ukraine, people in Europe. So it's
Yeah,
not really
no,
only
that's fair.
supply.
That's fair. It's definitely rebounded, right? It's rebounded a lot. And it's natural that when there are headlines and everyone's talking about it and Bitcoin hits all-time highs, that people are going to be talking and asking around. But if you just look at the raw numbers for the exchanges, right, they're just not where they were in the last bull market. And I think usually in a crypto cycle, things end up going the whole way. That's at least been, judging from history, that tends to be how it looks.
And it seems this cycle, a lot of newcomers are coming because of the meme coins, and we probably can say that retail is driven by meme coin craziness during this
Yes.
time. And you were on the panel at Talking 2049 on meme coins, and you mentioned as a fund you don't invest into meme coins, but do you invest personally into meme coins? And what's your take on that?
I don't invest in meme coins personally. I think I'm too much of a boomer. I feel like the other thing is to invest in meme coins, you have to move pretty quick. You can't really like sit around in a meme coin for a long time. You have to really be paying attention to the cycles and the memetics and the energy of the community and what they're doing. So I just don't have time for that. So it doesn't really make sense for me to be doing in my PA.
Do you believe in some kind of like blue chip meme coins like Pepper or Doge or Dog with Hat or something like that? That they just like keep
Yeah.
their seat and continue growing.
Do I believe? I mean, I believe that, Doge is going to stick around for a very long time. Do I believe that there's some fundamentals? I mean, I don't know. It's like the concept of meme coins, it's not unique. Obviously, there are a lot of companies that trade on the stock markets in different countries that are kind of bullshit and that don't really have real businesses, but people love them. So if you look at, Mao Tai, which is this, very popular Chinese hard liquor, it's a company that's one of the most valuable companies in the Chinese stock market, but their revenues are pretty shitty. It's like it's a beverage business. It's not an amazing business, but China is just so patriotic about Mao Tai that it just trades at this crazy valuation because Chinese retail just believes that it should be worth a lot. And so this concept is not unique. It's not, the crypto is not the only place where this thing happens. And of course, most markets or many markets around the world, many stock markets are retail driven. The US is unique. US is a very institution driven market. Retail usually is a small player, but many, many markets around the world, retail is much more powerful than the institutions. So if you look at China, Korea, these are places where retail is mostly driving the markets. And as a result, it's less about fundamentals and more about vibes. So I think it's not that unique on a global stage for there to be this subsector of the market that's really about vibes. And I think that's likely to continue.
So do you think that meme coins can evolve eventually into something bigger, maybe start doing something in gaming or something like that as well? Some meme coins starting offering staking, some other options?
I don't think so. I think that's probably a distraction. I think when a meme coin becomes convinced that it's something else, then it becomes kind of cringe. It's almost like when GameStop started being like, "Oh, we're going to start offering digital stores and start doing this and invest in the metaverse," and it's like, no, 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 guys, don't do that. Just like be GameStop. Like when you actually start taking yourself seriously, it becomes like you kind of kill the joke.
So what's your current thesis in what type of companies do you invest this cycle and what are you looking for?
It's a good question. I mean, the answer, as always, is we're looking for new ideas. We're looking for people who are building something that's genuinely unique and has a different angle than what's come before. So, when it comes to pulling out a call for startups of different sectors, we've historically not really done that just because I think it's really hard to predict ex ante what are going to be the new innovations that end up driving the next cycle. But broadly speaking, we're looking for people who are trying to solve a problem in a different way. And so whether that's an infrastructure, whether it's an application that's a new idea, or whether it's an exchange or some more traditional piece of the financial stack, as long as you're taking some unique angle, then we're interested.
And actually, these cycles, there is quite a lot of hype around AI and intersection of blockchain and AI. So can you tell whether you invested into any companies in this intersection and what's your take on that?
We've done a few AI deals. The most notable one that was announced recently was called MyShell, which is a tokenized chatbot platform. That said, I think we're seeing I'm talking to a lot of deals in the AI space.
Mm-hmm.
I think it's very frothy. There's a lot of bullshit that's being peddled around right now. I'm sure you guys probably saw the Martin Shkreli versus IONET drama.
Yeah.
Yeah, where Martin Shkreli called out IONET, which is this big decentralized GPU platform, for basically being full of shit about a bunch of stuff.
But this is
And
really crazy that they are now valued at over $1 billion. Some Taiwan funds invested into them. They had like one of the biggest booths as well in Dubai.
yeah,
And now like everything is revealed. So it shows that even Taiwan funds during this bull market not making a proper due diligence on the project they invest.
yeah, that's the problem when the bull market gets going, is that certain VCs, not every VC to be clear, but certain VCs end up throwing diligence out the window and invest in things they don't really understand. It looks like the founder apparently was involved with some shady stuff. He had some scams in the Arabic speaking community, but
Mm-hmm.
if you don't know Arabic, I guess you couldn't Google these things and you couldn't actually find them. But they didn't really do very much diligence. And apparently the GPUs, they claim to have 1.6 million GPUs, which, if you think about it, is more than Amazon and Meta combined, which is obviously ridiculous. Like, that there's no way that's true, but people were just accepting this claim to be true on its face. And then, nobody seemed to have actually used the product. And so the only person who's using the product was Martin Shkreli, who pointed out that the product didn't work and there were no GPUs available, despite the fact they claimed to have hundreds of thousands of GPUs live. And then the protocol itself got Sybil attacked with a bunch of fake GPUs. People were just creating cloud, just EC2 instances and pretending them to be GPUs, running GPU emulators on them, and then claiming that these were A100s and H100s and getting a bunch of tokens. And then they found, when they ran like a Sybil resistance check by having these GPUs run a proof of work algorithm, what they found was that there are hundreds of thousands of GPUs ended up being a few hundred GPUs. So it was all just kind of a complete shit show. The space is still very nascent, and you should do your own research. And there's a lot of work to be done, I think, from the VC side to make sure that people are really doing their homework. So when we looked at these deep in AI platforms, we saw this. I mean, we didn't see this particular, but we saw that there's not a lot of demand, there's not a lot of supply, the GPU quality is fairly low, and these things are not really on par right now with the centralized counterparts. So that I think is a large part of the reason why this IONET debacle ended up being such a shit show, is that a lot of VCs didn't do their homework.
And currently, this cycle is much driven by institutional investors. Do you consider as well for investing in any institutional service providers companies?
We've invested in several of them. I think it's a very interesting time because the market structure is shifting to be so institution heavy compared to the last cycle, which is very retail heavy. But I think it's ultimately good for the space. It means that there's going to be a lot more stability in the markets and less kind of crazy up and down retail driven drawdowns. So I think it's very healthy, and it's a good. Anytime you see a shift in market structure, it's a good opportunity to invest in a new set of players ended up becoming successful.
Yeah, and maybe you can add some last words, how you see the development of the market within the next months. We see now some kind of deep on the market. So do you see it will continue, or will we see some breakthrough?
Look, it's hard to say. I'm a VC, not a trader, so I don't try to make price predictions because I'm terrible at it. I would say, obviously, we're looking forward now to the end of May, when the Ether ETF decision will likely land. At this point, pretty much everybody's anticipating the Ether ETF will be rejected. So the question is really what happens from there. I think for this year, the name of the game is, one, macro. What happens to interest rates? I think that's going to be a big story for crypto. And then second is the election. The Ether ETF, I think, is a foregone conclusion at this point that it's going to get rejected, and probably it's going to end up playing out through the courts. There's a few big court cases that I think people are waiting on, of the Coinbase case, as well as some of the other attack lines the SEC has set on, like Uniswap and MetaMask. But the big thing is ultimately interest rates and the election.
Yeah, hopefully we will see a better outcome for crypto, and the bull market won't end that much soon, and we will see much more
I'm
great
still pretty
companies
positive. I
rising.
think oh, absolutely. We're definitely early in this process unless something comes out of the woodwork and changes the whole picture.
Yeah, thank you for a great conversation.
Always my pleasure.